We like to speak about gold. Can we still buy it or not? Up or down?
It's down, actually. So remember we were talking about yesterday the fact that it might breach that 2,000 mark. It hasn't yet. There's still speculation it could in the coming weeks. But for now, they've cooled down a little because I think people are starting to cash in on that rally that we've seen in the precious metal.
Oscar, over to you, the details on everything.
Gold prices have cooled from their record highs as traders cash in on the feverish rally. Prices were on track to reach $2,000 an ounce as rising tensions between the US and China and a resurgence in global coronavirus cases pushed investors to safer assets. They're becoming less optimistic of a quick economic recovery as several countries reimpose lockdown measures to battle a rise in infections. A flood of cheap money from central banks and governments around the world has also fueled appetite for gold, with investors now waiting to see what the US Federal Reserve will announce after its latest meeting this week. Okay, let's get more on this now with Karim Yousfi in London. He's Chief Global Strategist at AudaCity Capital. Welcome to the program, Karim. Now, tell us more about why we're seeing gold prices ease from those record highs.
Thank you for having me, Oscar. Actually, if you're going to start from a technical point of view, the gold is actually now on a triple top. It happened already in 1980. In 2011 and this time on 2020. But this time is quite unique because we got a combination of elements which is pushed gold that high and that fast. And one of them is the pandemic, which is the outbreak of the pandemic. If you go back a bit, when the outbreak of the pandemic, we had this reaction from the investors where they were like panicking and having like a shock effect where they're looking for options, for other options to hedge their exposure. If you go to anyone back to 3 or 4 months ago and you say to him, I have a big exposure on stock market, on dollars, he's going to say to you, buy gold. So that we got those people who are buying gold without even thinking. And this move we have seen in gold from reaching 1981, not many people, they took advantage from it to make profit. It was mainly to hedge the exposure. For that, what I can say at the moment is we have seen a lot of people who are closing their positions and taking profit. That's why we have seen an ease of $50, but it's not that much. It's maybe it's not like a catalyst. It's just $50, which is normal market behavior. He has to correct a bit in order to go further up.
Interesting. Do you think it will go further up and breach that $2,000 an ounce mark?
In order to answer your question, we need to understand why it keeps going that high in short period of time. And one of the elements, which is not a lot of people that are talking about, is the cheap dollar, is the low yield. Dollar, as you must know, is high yield asset. And because of this pandemic, we have seen the yield is back to zero. For example, yesterday, we have seen 10 years yield, 10 years dollar yield hitting the record low in history. And we've got more than 14 trillion negative bond yield in the world. So that not many people are just looking for alternative and just looking for an option to hedge the dollar, which is, I think, gold is taking advantage of that. And on top of that, we have the tension between China and the US, which is going on, and the potential of second wave of the coronavirus. For that, never say never. $2,000 ounce is quite a psychological level we have never seen before. It's very important. For that, I don't see that it's going to see it soon, but definitely it's going to happen. We don't know when, but I think before we see that happening, we are going to see some correction because a lot of many traders, especially the speculators, are going to cut their profit, and we have seen some retracement back to continue further up. Yeah.
Okay, never say never. Karim Yousfi in London, thank you again for joining us.